Alright, I wanted to make another M and W video because even though this is a really bad time of the year to be looking for these trends and trying to learn how to trade it, this video is going to be looking at December 29th, and even though this is really not the time to be doing this, I'm still learning to identify the look of it. So that's basically what this video is about, the look of it and also the underlying idea of how the M's and W's are supposed to work, even if they don't work that way this time of year. So again, today's the 30th of December, but we're going to be looking at yesterday, which was the 29th. And I'm currently looking at, I think it's 18 pairs that I'm looking at, and I have my profile set up in a way that I can do that pretty quickly. So on the 29th, which was yesterday, I will show you which patterns I identified. Well, it's always easy to pick these out in hindsight, and M's and W's look probably quite a bit different the next day than they do when they're forming. But the very first obvious and clean one that I see now is the US dollar Swiss franc, and this here was yesterday's session. This little orange area is the market maker spread. It's that time when the consolidation happens. Now the way that I look for these M's and W's is a break out of this consolidation, but that break is normally a fake out break. So if you see a break going down out of this channel or range, then if a W forms down out of that range, you're anticipating a move to the opposite side. If you see a break to the upside, then you're anticipating a move to the down. But there are times, if you look back on your charts, you'll see this, and of course, again, this is not the right time of the year to be doing this, but there are times when the breakout will happen one direction and then another direction, and it's that second direction outside of this market maker spread direction that is the real move of the day. I don't know if that's how it works on a regular day, but obviously these patterns don't show up in every currency pair. They only show up on the signal pairs, or whatever pair I guess the market makers decided to run this on. So yesterday on the dollar Swiss franc, we had our market maker spread. We have a break to the downside, no confirmation of a M or a W, in this case a W. I have heard of people that trade the V. They say just the V, which is people that trade this method, by the way, of M's and W's. They sometimes will say that there's a clean break off of the first leg, which is really the V, and sometimes price would just take off from that point on and not come back to form the second leg. In this case, however, I don't know if I would trade that. For instance, this would have been a V here, and you would have entered to go long there, which would not have been a good move. But look at that. We have a nice M right there, and let's see if I can draw on this. Yeah. Okay, so we have a nice M right there, and the entry would have been somewhere in there at the break of that fail candle. I think it's that one right there. And this would have been a good setup. Of course, like I said a bit ago, when they're forming, they don't really look as clean and as tidy as they do when you look back at them. But this one here has pretty much all the makings of a nice M, minus this false breakout to the downside first. Okay, let's look for the next one. I'm going through a lot of currency pairs here, and yesterday we're seeing a ton of formations that broke out of the market makers spread, this channel here, and just continued on from that point. Came back, retested, but continued on. So there was a ton of movement that didn't look anything like what we're looking for. So I just thought I'd throw that out there. On the pound yen, I just thought I'd point this out. This to me looks like a pretty neat W. Draw it in for you. Coming out of the market maker's spread and then doing that. But obviously there was no real trend on the pound yen. I think the daily range was only 85 as opposed to the 100 or 126 range from the last month. But there is that W there. Not a very good W to trade unless you would be happy with around 40 pips or so. The euro pound, another example of kind of an M forming up here. It could have been tempting, I guess, if someone was looking at that and saw this retracement, then a retest to the high but never broke it, to go short. Not very good though, because again, we're looking to get in on the move of the day, the move that moves the average daily range, at least from the last week or month. So I don't think we're looking to scale out or to close our position, say at 30 or 40 pips. We're looking for 50 to 100 or more pips. Okay, I did see this one, the EURCAD. Now, I think this is, it's almost a beautiful breakout to the downside, then gives us that W, except for this little breakout here to the upside of the market maker's spread. This might have thrown me off a little bit, because once it breaks that the market maker's spread, I usually am thinking that the move is going to go the opposite direction. At least that's what goes through my head. But in a case like this where there is no retest of that area, I suppose we could look for a break to the downside of that market maker's spread. There's got to be an easier way to say that. The Asian channel there. And in this case, the Euro Canadian did a very nice W. Do that again, like so. And of course our entry would have been right there, and that was the direction of the day. So far we had 2 good setups from yesterday. Yeah, I wanted to show you the Euro Australian dollar. I noticed that there was a W. The thing about this one, I mean, if you agree that that's a W and that the move of the day began around that point, hardly anything left, is that even though this looks like a W, look at how far into the day it took to form, well into the New York session, which I don't think is a good idea, because these formations are supposed to happen between 1 a.m. and 4 a.m. Eastern time. So I have noticed some of these. This is almost like the W that you would see at the end of the day, but just thought I'd put that in there for feedback. Okay, so this is the Canadian dollar Japanese yen, and I'm showing you this because this pair did have an upside down V without the second leg to make it an M. And I told you that someone who trades this method will oftentimes enter on a V instead of waiting for the second leg to form. Anyways, this is an example of that very thing happening right there, and then the move of the day would have started right there. So I guess make your own decision, but this would be interesting. We had a nice break of the market maker spread. We had a high there, no retest, just straight down movement. What do you do in a situation like that? New Zealand dollar Japanese yen. Nice M, but it's a fake one because price continued to go up. We come out of the market maker's spread, and we got that M right there, and then downward movement, but we don't really get hardly any movement to the downside, just about 19 pips. So that's an M that would have looked really nice in the making, but would not have turned out to anything. And this is the last one. It's the pound CAD. There is kind of a bit of a W going on down here. We have a break from the market maker spread. We get this, and then a W going up. So that's the M&W analysis for December 29th. Hope you enjoyed it. If you have any comments, please feel free to add them and toss in your 2 cents on this subject. Thank you.